Okay, so Sherman here, and today is the 1st of July. 1st of July. Let's go look at some charts and try to find a bias. Okay, and trading in that direction. So I was looking here at the next. Um, okay, so this play on the decks, this play on the decks is still there, meaning that at some point looking for price to come down. So the last time we spoke of this, price was from here, from here, we're looking for price to go up, right? That's strength. So over here, we're not looking for it to come down, but for here, we're looking for it to go up. And then once it reaches the top, we're looking for it to come down. This one, looking for it to actually come there, but to reach this area. But if it did not, of course, know how to exit and know how to enter, right? So that comes with day trading skills. Uh, these places are not places to sell. This is a place to sell. This is not a place to sell. Okay, so even if you sold here, the entries here would have supported the entries here. So if you're position building to the downside, that's fine. But you don't know how to day trade and you should know how to day trade and exit your positions. Okay, but whether it being stopped out or most likely it's being stopped out actually, because you're hoping that this goes to the downside, right? So this looks something like this. So now that you got the candle separation right there, so now this looks all bullish. If you look at this green, this red, and this looks like it's gonna break, so it looks upside. The thing about the DEX is, if what you really want is for this actually to come to the straight two, it's what you really want. Right? These are all levels that are going to be very interesting. These levels here, 382. See, the best place for this to go is actually to go and break this top here, because if you can break these tops over here, that would be the best. Let it form some double top here, something. Um, then you're looking for the move back down. See, um, when price came down here, let me see. Price came one, two here, three over here. So this one came down. So this one could have come down. Could have come down. It could come down like this. But unfortunately, there is one play or one swing play where it could get to this trade too. Quite possible. Quite possible. Therefore, selling this, you cannot pick these tops as this is going up. Even though we like this move to the downside, right? But you cannot just pick this top thinking that impulse for whatever reason come here. No, so it's very very dangerous to do that. The best move, the best play would be something like this, right? That means the easy pickings would be something like this. You actually reach there. Some of these zones over here, right, where the push was, basically where the push was. We can do something like a one, two, three, like this, and then you see something like this down, like here, one. You see this up, down. If you can get this over here, this is a good sell, and probably even come break the low. Um, that means looking after it's finished, it's whatever it's done over here at the top, and it starts to say, hey, I can come down. Then you know exactly where the stop loss will be, because you, now you're looking at impulse correction, impulse, right? So in other words, uh, yeah, where's that profit bar thing? I don't usually draw that here, but then it would be something like this. So this would be the idea, at least to this low over here, right? So you would see something like boom, boom, boom. So when this And this basically finishes whatever it wants to do, like this. And then you see like something like this. See, pong pong pong, pong pong pong, impulse correction impulse. Yeah. So that is what you're looking for because this impulse correction impulse is supported by this, supported by that, right? Supported by what? Impulse supported by this, supported by that. And then you're looking for a pong pong pong. See, so that's what you're looking for. If you're looking to trade, swing trade is not about trading every day. That means you just wait for uh, price to reach certain places, and then you're looking for the correct size of the appropriate corrections, right? Before you take the next swing. So yeah, the next upside, and then followed by looking for the downside. So now that so yeah, okay, so something that you're looking for, that means for this setup, it would need let me see how much time this time packed swings would take about well, that's a long time. It is a very long time. 175 days, I would say, about that. So now it's let's see, it's July. So somewhere towards October, looking for a big move down. Well, that depends also whether um is this is this going to be, will this just move up and come down? Let's see. But this low picking fruit, this easy fruit to pick will take about 3 months. And this is basically what I'm trying to say. You can see here this example over here. You see this one over here like this. So it's the same thing. You see all this pong pong pong, pull back and then pong, exactly up again. So if you see this completion pong 2 3, then after that 1 2 3, then you see up and then sideways and then break, then it comes out again and it goes up. Some people call this a retest, supply demand. Okay, it's fine, it's fine. But basically the structure is like this. Yeah, yeah. This is a good example. So you see the structure over this side. So I just noticed it, and yeah, you can bring the structure over here. That's what you're looking for, and then you see how much time it took. Yeah, about 130 days as well. You see, that's why 130 days. So if you're looking for to make these epic swings, and then you just slowly add to the trade, that would be your 30% to 30 to 40%. Uh, so while I can share the things, although I can share the forecast of what you're supposed to do, but I think, but what I cannot pass on is the patience and the patience and the belief. You know, so I can pass on the knowledge sometimes, but even for new investors, when they want me to trade the money for them, but the thing is, not everyone believes that you could lose small and then you could win big like this. And there's a lot of, it's not this isn't scalping. This is position building over a period of time. I mean, you have to wait for at least even to even see the money. You have to wait. You see that 105 days, 98 days, and for most people, they just don't have the patience and or the belief that the cow can grow 50% in 98 days. As you add to the to the to the to the positions, right? So, but this is knowledge that I can share. Uh, Actually, doing it requires maybe screen time and patience. So that an individual trader has to be able to learn on his own, right? Okay, so I'm gonna pause this for a while, do something, and I'll be right back. Okay, and we're back. So, where was I? Okay, let's look at pound cat. Hmm. Okay. Let's go look at 8 hours. Mm, okay. Let's go look at 4. Mm, let's go look at 1. Okay. This is what you're looking at. 2, 3. Mm-hmm. Okay. Yeah, that's the one. So, yeah. Mm, good. 1, 2, 3. There you go. Which means, which means even though I think it's down, but I think it could go up first before it comes down. So let's say somebody tries to sell this for whatever reason, they try to sell it down here. I think that profit theory says you want to stop them out. People who sell it, stop them out here, then come down. So my bias for this would be downside, but I will not sell this down. I prefer it to make it needs to make one more up. It needs to make one more. So even though I'm saying there's a down, but not this down, not this down. This down I'll be interested in. Yeah, this down I'm interested in. So that's how look at the bias. Find the bias, and once you have the bias, is from here you can try to scalp the downside. But from here, should I scalp the downside? No, you should not scalp here to the downside. You should scalp here to the downside. All right. So start looking for a trade when it gets up there. Basically, if this goes down, then it goes without me because I don't like this look. I don't like. I don't like this look. This look upside looks possible, but I like the sell though. The sell looks like a good idea. One, two, three. Pound cat. Nice. I think I want to look at anything else. Okay, that's one trade idea. The more trade ideas we have, the better. I think Dodge always a good one to look at. I think it's an opportunity for a lot of people. Um, there's a now we're in a weekly time frame. Weekly time frame. There's a huge wick over here. Huge wick over here. It no, it's not a not that it will always happen, but generally when there's a wick, it is it is it is said that the weeks often get covered, at least until maybe about halfway. So I'm looking at this and I'm thinking, let this come back down. Then let it come back down. So that means being more patient and let it come back down like this. It's quite similar to what I'm saying about the pound cat. Let it clear out a little bit more before even deciding to do anything. Right. So that's why I go back to pound cat. It's actually pretty much the same thing, you see. So like here, see, it's pretty much the same thing. It's all time based. So do I think it's ready to go? I don't want to sell it from here. I want to sell it from higher up. And then it looks better if it goes up, and then one, two, three down, right? Yeah. So Dodge, pretty much the same, the same idea. So Pound Cat was this way. I'm hoping for this up move before it comes down. This one, I'm hoping for this down move before it goes up. This down move before it goes up. Just the opposite. So, but always wait for confirmation because this move down could always do what? Could always come here and crawl and break this low. So you don't want to be one of those too naive to think that this will definitely go. So you don't want to be that kind of trader, right? If you want to trade here, you gotta put in small lots to account for when it goes down below. That's one way as well. Okay. So that's Dodge. Um, is there anything else I can? Mm, I've not looked at metals for some time. I've not looked at this for some time. Charts have not been updated. This looks kind of weak actually. No, I don't think I'll look at gold since I'm not trading it. DEX is creeping. DEX is still creeping. So we could put on some moving averages. It's kind of trending. Let me see. 4 hours. See, this one looks like it's going to break. But what we really want to see is a. What you really want to see is a move back this way. Could be this way. Could be that way. Oh dear. 1 second. Okay, everybody. So let's have a look. Um, mm, Now this kind of waves, they can keep going forever, forever. But at this point in time, I would need this actually to pull back one more time. Yeah. So meaning that this could just crawl maybe and crawl and maybe like something like this. It just keep crawling forever. But I'm not really keen on that kind of trade. What I need is a bigger pullback. So meaning like remember we were talking about those 1 2 3 1 2 3. See, it's 1 2 3 trades over here. See 1 2 3. It's just like on the Dodge, right? On Pound Cat, we talk about that 1 2 3. So right now, what you need is one more. It can be this way, it can be this way, whichever way it is. You need the one more. At least maybe this moving averages because this is kind of trending up. This is a potential impulse for 1 2 3. And when this tree is strong, this one can keep pushing in one direction only. But if we enter at the wrong time, we could get caught. You see, it's quite this markets move in a very tricky way. So, what you want is really something like this. You see all this? Yeah, exactly like this. So people who had taken a buy, they should exit. Otherwise, what happened? This will come and take them out, even this low. So this is actually what you want for it to come back down. This would be the safe trade. So we're talking about safe trading, right? Um, uh, where there's more. So if you're looking for this move to the upside, is it better to go from here to this level or from here to this level? Which one is better? So it's always better to have more meat on the bone to pick off, so to speak. That's why if you're gonna relate the DEX to the euro dollar, some people were wondering what they should do. They think that this is gonna go even lower. So let me just remove this. I think this go even lower. But here's the thing: I see that possibility, but I don't want this to go from here to there. I want this to go back up, then go from there. This is where I want to enter, not from here. So, therefore, my trading is always contrary to what a lot of people are doing. I'm always the opposite. Honestly, I see some people on YouTube. I look at what they say. I'm like, oh, come on, man. It's kind of crazy. It's kind of crazy. When people are looking to, so actually sometimes the best way to trade is just be contrarian to the masses. If 100 people, you just throw, what do you think? Should we buy? If most of people say they should buy, then maybe you should start selling. Like when Dodge was at the top, and people were saying Elon Musk going to the moon, and no, not Elon Musk, Dodge going to the moon and stuff. It's going to hit $1. Well, yeah, no. But it's like when everybody says the same thing, that is when you start to it's time to exit. You know, so be contrarian to what people say. Most of the time, most people are going to be wrong. So um, yeah. So like for Dodge, even if you're looking to buy, wait for these things to play out first. This play out was a good thing. If and if you get the buy too early, if you some people do just flip like this, right, and buy. But that's not a good idea. You need to have some kind of confirmation on this going to the upside. One thing, and the other thing is this one could always collapse here. This is also a good buy, right? Okay, so take note of that, but don't buy this to go to the moon. That's wrong too, right? Buy maybe something about this much from here. Exit at 32 cents. Is it going to 80 cents? Some people, if people tell you it's going to go to 80 cents, yeah, yeah, you know, um, depends. If a person wants to buy here and then just walk away for some time, but otherwise, be prepared. Be prepared that all this can happen. See, very very sharp. So this could always go and then wipe out all the potential profits. Right. So don't hesitate. When it comes to swing trade, don't hesitate to take some out. It's not like scalping. In and out, but in swing trading, it's okay to take some off. Build your positions and allow when price turns back down, just get stopped out. Then just wait a while. Don't just enter the trade because if we enter a trade again, a bit too excited, then what happened? Going to draw down, right? So patience is very important. Um, let's go look at so pound cat. Don't forget pound cat. We spoke about pound cat earlier. Dollar yen. What's dollar yen doing? Dollar yen's having a few day. It's having a few day. Let's have a look at the weekly. Okay, let's look at the monthly. Let's close all these. Oh, okay. Let's go look at the 2 months. Right. We have this and we have that. Dollar yen looks up. It looks up. Now it looks up to a certain point. Let me see. Yeah, it looks up, man. I will not sell. Let me see if I think the dollar yen is upside. Means I cannot really sell any of the yen pairs. It looks up to me. That means all the yen have to be. Yeah, it looks up to me for now. I see a candle separation here. So it's very strong. So the yen looks strong. Okay, so let's go back down. Okay, so let's go back down. So which means 1, 2, 3. You don't want to buy it here. It's too late. You have this strong move down. You need to hope for some kind of move to downside like this. Some kind of strong move. Now you can put on a moving area just like this. And you know what? You want this to come back to something like that. Let me show you what you're looking for. You see this? You see, no. The interesting thing about this, even though it came back, but you did not aim for. You see, it's not like because it touched. It's not like that, right? This is my last chart, so at least I'll be gone. But you're not aiming for that. Just come here, you take some, which is pretty good. Which is pretty good. So if it happens to come down, see to the area of value, this is a good place to try to get in once it comes back to this 200 moving average. Like so, and therefore it also gives you a nice 1, 2, 3. What is this? Yeah, okay. This is every chance of getting up to this 270 very possible. But wouldn't really want to enter here. If you enter here, this play is very possible. So if we were going to be playing this move to the upside over here, you got to be in and out. Otherwise, you're going to get caught by that. So, but let me see. So right now it's respecting this moving area. So when it's trending mode, wave structure says you should trade the upside. As I shown earlier, why I'm interested in the upside. But getting in on a good entry, one is something like that. This is a good entry. If it pulls back so sharp, that's a good thing. More meat on the bone. You're still looking for the upside. See, this is looking for upside. This is also looking for upside. This is not the one that you actually want to take, right? This is going to be kind of a little bit tricky. It's trading against the bias. So when you're trading against the bias, uh, there's always something. It affects the psychology. You see, you may not be able to stay the trade, right? So, but I prefer the upside rather than the downside. So, uh, if price could come back down, much like that, that would be a very good thing. And crawls like that are susceptible to this kind of strong, violent moves to the downside. Okay. So any trade to the upside, anybody wants to trade the upside should take note of stuff like this, like this. You see that? So it formed this kind of so naturally we don't buy here. We buy when it pull back. You see. So again, don't buy here. You buy it when it pull back here. All right. So now can you buy here? Can. You gotta wait for what? A pullback here. But this pullback, don't forget, could be something violent. And the violent one is the one that I'm interested in, which is this one actually. Or something sideways. A bigger one. A bigger one. And it means just waiting. So how long did this take? This one took about 25 days. Okay, so don't wait for 25 days if this is the big move for more upside that we are looking for. Based off the structure. One broke the top, let it pull back, go again. That would be good. Mm, yeah. See, they're all a lot. There are these violent moves. See, this violent move down. You thought this was gonna go right, but look, before it went, what was this violent move? You thought this was gonna go right like this, but what you see, violent move. So what could you get? A violent move. Gotta be aware. That's profit theory. That's how to get people, put them on the wrong side of the market. Always remember, you're taking money from somebody, gonna get on the wrong side. Okay. So thank you for watching this. I hope this was helpful in understanding timing, and profit theory. So you take care. Bye.